Shwetank, hi, good to have you with us. How have you been?
Hey Ashu, good to see you again. I'm great. Good to be here.
I hope everybody is safe, sound. These have been very, very difficult times. We know you're not in India. You're in Singapore, which is, of course, a better place. The way they've managed it, it's a smaller country, right? But I hope everything is safe.
Thanks, Ashu. Yes, touch wood in Singapore, it's all been fine. Of course, COVID hit home, and yeah, it's been tough times. I hope your family's fine as well. It's been a
It'll be
really
safe.
tough few months.
It'll be safe. Shwetank, this is an interesting discussion, right? I'm particularly looking forward to it, given that we're going to be discussing a lot about InsurTech, right? We're going to be talking about the framework, we're talking about the construct, right? And I think this is one of the hottest sectors, right? And one of the largest and underserved sectors in India specifically, right? I mean, it's a global problem across developing nations, right? But I think India particularly has had a very insignificant depth, when it comes to InsurTech, right? Or insurance in general. And I think that makes this and you've been somebody who's championed the cause, right? So yeah, I'm looking forward to this discussion.
Same here, Ashu. Yes, looking forward to chatting about all things InsurTech and wider, but InsurTech, of course, is close to my heart.
Interesting. Shwetank, before we dive into the session today, right? And of course, we talk about InsurTech, we talk about some of the portfolio companies that you have, right? A quick round of introduction will be helpful, right? For many people who are going to listen to this session.
Sure. So, Ashu, yeah, hi everyone. I'm the co-founder and general partner at Leo Capital. We are an early to mid-stage tech investor. We're based out of Singapore, but we invest in India and globally. But of course, India is our key market. We typically invest sort of between 1 to 2 million US dollars in mostly pre-A rounds.
Mm-hmm.
A lot of our companies are public, so you can see they're on our website. But we made about sort of 26 odd investments since we've been around since 2018. So 3 years of existence, we do about 8 to 10 investments every year.
Fantastic. And Shwetank, you've worked before that as well, right? So I think in addition to what you mentioned about Leo will be interesting.
Sure, yeah. So my journey, is basically entrepreneur, investor, entrepreneur, slight slight detour to corporate, and now investor, which is where I think it'll be for the foreseeable future. So I built my first business while I was at university in the UK. Had a small security services business. It was my first exit as well, one of the most fun times I ever had. Then did a very boring job as qualifying as a chartered accountant in the UK, which was tough and exceptionally boring. But it's a great skill to have as an investor. So if there are any CAs listening, I know it's tough, but stick with it. Get that degree. It's worth it. Um, then I moved from the UK to Singapore to work for a multi-billionaire called Richard Chandler, Claremont Group, sort of doing investments both in the public and private markets for him. Uh, did that for about 5.5 years, running most of the India deals. Then I was having the entrepreneurial itch again, so started up again in India this time around, and learned the hard way that doing business in India is tough. It is for a reason that it's a tough market. We managed to sell the business in 2016. I moved to Singapore again, ran innovation for MetLife Asia briefly, and then set up Leo Capital with Rajul Garg in 2018. And since then, we've been busy working with entrepreneurs as an investor. So it's good to be back on this side of the table.
Interesting. Shwetank, in the first half of the conversation, we're going to talk about Leo, right? There's some incredible work that you've done. You've championed the cause of certain sectors, right, which were extremely emerging, right, and there were not necessarily a lot of risk takers at that point in time, and you entered that deal, right? I mean, of course, I've had the chance of knowing Rajul, and I mean, I there are a few things that I really like about him. I think the way he cuts it has been absolutely phenomenal. But I think a little bit of a run through in terms of the portfolio, in terms of your preference areas, right? You mentioned about where you enter and what's the sweet spot, right? I think, but a little bit of sense in terms of what's the portfolio, what's the thesis, I think will be an interesting point to understand about your philosophy.
Sure, Ashu. So at Leo, we are very bottom-up investors. So it's not sort of top-down that, hey, we need to have 5 fintech investments, 3 InsurTech, that kind of thing. It's more, the question basically is, can a large venture scale business be built in the space?
Right.
So it's driven by an understanding of the market and the sort of time and space,
Right.
And we look to be educated by entrepreneurs. So that's the question we ask typically:
Right.
that why do you think this is big enough to build, venture scale business?
Right.
And I think that's where a lot of people forget that venture capital is about large scale outcomes, and truly sort of big businesses need to be built.
Right.
So a lot of our time goes there. So we're bottom up. So we try and understand from the entrepreneur: is there a big enough space? What's
Right.
exciting? What's their sort of unique insight into why there is a space there, there's an unmet customer need there,
Sure.
and why they think there's something going to be exciting to be built. And
Right.
if you get excited about that, then we typically move quickly and back them. So that's why, if you look at our portfolio, it's pretty broad, from logistics, where the team at Wahak articulated very clearly why
Right.
thin marketplaces, by thin I mean low take rate marketplaces, very exciting for Indian consumers,
Right.
businesses, that is, all the way to something like Bulbul, which is video live commerce,
Right.
streaming. So as far apart as they can be, but tied together by this concept of why a large business can be built, what's the unique sort of insight that the founders have, and
Right.
why they like people to build for that.
Right. Very interesting. Shwetank, is it correct to understand, right? And you can possibly correct me in the course, right? But are you? And a lot of occasions, you come across entrepreneurs, who are not necessarily very clear in terms of what the market size could be, right? But they're working on exceptional ideas, right? And these are ideas which, and like I said, because of lack of exposure, because of lack of prioritization, there are those challenges, right? And India is not a simple market. Like I think kind of we both agree on that bit, right? It's a fairly complex market. Uh, do you still go out and participate, saying that, listen, you're doing something incredible, right? And this is something which could potentially be big, and we'll come in and take risk, right? And then there are a set of investors who say that, listen, we're not going to be running it, right? So it's very important to have that founding team capacity to understand the market and dissect it, right? Which is your way of doing it.
So I think we have to convince ourselves, Ashu, that there is a large market here. So even if the
Sure.
entrepreneur has not put the time together, it'll be the team's job to sort of our team's job, that is,
Right.
to look at it and make sure we are comfortable that there is a large market opportunity that we're going after.
Right.
But obviously, otherwise, it's all about the team, right? And that's what I meant by saying that they are the right people to build this. So
Sure.
we look to understand why there is founder market fit, right? That concept is bandied about a lot, but it makes a lot of sense. And we are investors, as you'd like our investors to have been as founders, right? Both Rajul and I have been founders. We've built
Right.
businesses, so we know that the worst thing an investor can do is sort of meddle on a day-to-day basis, right? Or
Right.
try and run the business. I think
Right.
that's a big. It's a step change. I'm not saying that other investors don't get it. Everybody does, but we come from that operator background, so I think truly get it, that how you want to be there for support, but you want to step
Right.
out of the day-to-day kind of uh, business.
Right.
So yeah, so I think for us, a lot of times the company has not necessarily articulated a large time, but we've arrived at it. We're comfortable with it, but the team has
Right.
been spectacular.
Mhm.
I think we've taken some very early stage bets, like say Wahak in the logistics
Right.
space, or Ria in the insurance space.
Right.
These were concept level entries, because we were convinced that the team was great, and the space was there.
Right. Interesting. You mentioned two of them, right? Actually, three of them, right? Do you want to tell us a little more about the portfolio? Which are some of the the ones you think are exceptional, right? And I think time will prove it, right? Which are some of those companies in the portfolio?
It's the portfolio. They're all exceptional, Ashu, of course. But but the ones that sort of I think have done a great job. One of our first investments was a company called Beto
Right.
in the diabetes management space. I think they've done a phenomenal job of educating and growing a business in a tough market in India,
Right.
where awareness of diabetes itself is low, then awareness of how to manage it is low. People are not sort of keen on spending money. Insurance doesn't cover a lot of it. So I think they've taken all these challenges and tackled them one by one in an exceptional manner to become the largest diabetes management platform in India now, with a path to being the largest in Asia, which is very
Right.
exciting. So
Right.
Beto jumps out for me as something that's truly incredible. We have a couple of companies in the logistics space, so Infra Prime Logistics and Wahak.
Right.
Again, two huge sort of markets, right? On a global, on an India basis, very large markets. Great opportunity to add digitization, to add technology to them, and two of them doing very different things. Infraprime Logistics is a construction logistics marketplace, while Wahak is more of a SMB marketplace, but both
Right.
growing very well. Great teams, great opportunities. Um, we have a sort of one of our marquee companies is India Gold.
Right.
Nitin and Deepak, well-known founders.
Right.
Again, great, clear, sort of large TAM, right? Everybody knows that uh, Indians always want more gold, and
Right.
uh, they're bringing that together both from a lending perspective and also from a digital gold buying perspective. And
Right.
I think it's one of the best consumer apps there for the gold market. So
Right.
incredible progress there. Yeah, I mean, I think these were the ones that sort of come to top of my mind from an India perspective. A lot
Correct.
of our portfolio also is SaaS, which
Mm-hmm.
is India building for the world,
Right.
which is slightly different from some of the other funds, right? That focus more on the Indian
Right.
consumer. We have great breakout companies in SaaS, WorkSpot, Lambda Test, but those are not companies that will be widely known in
Yeah.
in a consumer market. Yeah.
Right. Very interesting. So then, we're gonna move to the to our discussion on insurance tech, right? And InsurTech, like big four, right? And uh, like I said at the outset, right? This is something which is picking up, right? We've been talking about fintech in a very generic way, right? But I think now subsets are kind of becoming clear, right? So I think wealth tech is something which is taking a priority. Portfolio management is kind of taking shape, right? Many other options in terms of fixed assets, right, which can generate consistent income, for example, right, is kind of taking shape, and that's emerging very very fast, right, as an independent set. Uh, Insurance is possibly one of the largest, right, and the most significant. When you start to look at that, right, how do you what's the macro on that, right? I think it'll be interesting if you could run me through, how do you sort of see that entire space playing out? Uh, I think it'll be an interesting start.
Yeah, sure. So insurance, super exciting. I think if you think about it, sort of top down macro,
Sure.
the number to think about is 3,000 USD of per capita income on a PPP basis. So historically, insurance has shot up once GDP per capita crosses 3,000.
Right.
And that's simple to understand. There's always a need for protection, right? But below that number, it's just very few people have the ability to pay. There
Right.
may be willingness to pay, but the ability to pay for protection is just not there.
Right.
And when if it's not there, then obviously there is no large scale insurance market that can be built.
Right.
And historically, a lot of countries, whether you look at China, you look at Indonesia, you look at Thailand, penetration has shot up once the country has gone past the 3K
Right.
GDP, 3K mark.
Mhm.
Um, by all accounts, India should be there and thereabouts in the next year or so, right?
Right.
So, and then when you take a look at India's market, the size of the market, right, the opportunity for premium growth becomes just incredible if the same kind of dynamics are observed as
Mhm.
were in China and other markets. And why shouldn't they be? So, if you think about it, today China is like an 800 billion plus premium market. India is slightly less than 100 billion.
Mhm.
So that's an 8x opportunity plus, give or take a bit, right? So maybe 5-6x of opportunity in the next 10 years. So that
Right.
means that more new premium will be written than all the premium that's been written so far.
Right.
And that means obviously there's an opportunity for new thinking, new models, new approach to customers, new products.
Right.
The classic tidal wave of disruption, which excites venture capitalists and makes it hard for incumbents to compete because these are net new to insurance customers who are coming on board. These
Right.
guys have never bought insurance before. So the
Right.
old models of agent-based high cost policies may or may not work. They
Right.
may work for some part, but they may not for large portions, and hence lots of new value will be created. The old
Mhm.
guys will still have lots of value to fight for as well. So it's not as
Right.
if there's going to be destruction, but lots of new value will be created. And I think there's an opportunity for world class businesses to be built. ACCO is already doing something like that. ACCO's So Acco is a classic example, right? Launch that ride cover for 1 rupee in with Ola. That's a truly disruptive product, right? You bring the
Right.
price of protection down. You make it focused on a very short period.
Mhm.
No incumbent could have done that,
Right.
just because they just don't have the tech. They don't have the know-how to manage these small, sort of low value but high volume
Right.
products. And quite frankly, the business model doesn't support it, right? The business model is about selling one large policy for 10,000 rupees, not 10,000 policies for 1 rupee.
Interesting. When you say that, right? Uh, I mean, you know, I mean, see, at the end of the day, the foundation of doing insurance remains the same, right? It's just a category that you're picking up and saying that, listen, you're going to do it for this, right? I mean, tech, I understand where you're coming from, right? I think tech is more mindset than actual delivery, right? Do you think that that is a right assumption? That is a right presumption in the scheme of things? Uh, because eh, I mean, entrepreneurs, you'll need entrepreneurial spirits to identify those opportunities, which is not something that large enterprises have been very efficient in, say, in terms of identifying, cultivating, capturing, right? And then that could have possibly contributed to a new product line, right? Is that, do you think, the gap that is, or do you really think that there's a structural problem which cannot be tackled by the larger players, right? What's your sense of that?
Yeah, there is a structural problem as well. Tech does matter because if your systems don't allow you to create a product that only exists for 30 minutes,
Right.
then you cannot solve that problem. Then you can
Sure.
only think in larger terms, right? So, yes, fundamentally, insurance remains the same, that you bundle a bunch of people together and few of them have adverse results and everybody else subsidizes those adverse results,
Right.
right? So, nobody's, I think, questioning that fundamental unit of insurance.
Right.
But how you build a business around that changes quite dramatically if you need everybody to put in a significant portion of capital to cover for lots of losses, different types of losses,
Right.
versus whether if you focus on them on small losses, change the duration. So it
Sure.
becomes a totally different product when you slice and dice it differently.
Right.
And tech is never, of course, tech is never sufficient, right? But this is a necessary condition.
Right.
So if you don't have product, if you don't have your backend system, the ability to do that, but more importantly than tech, right? I wouldn't say it's mindset. I'd say it's the business model, right? It's the way the business is structured, right? The way your KPIs are structured, the way your bonus systems, your incentive systems, if they are all linked to GWP at the sort of global level, at a combined level,
Right.
then it becomes always easier to focus on selling the larger, more high value policies,
Right.
which make more money but may sell less because your bonus etc is tied to that. So
Sure.
I think that's what holds the incumbents back, not necessarily. I mean, Clayton Christensen has done the best work on this, right? The classic innovator's dilemma, that if I was to move from my 10,000 rupee policy to 1 rupee policy, I am making a massive loss unless I make up the volume very quickly. And
Right.
typically, volume takes some time to build, while
Sure.
your policy cost comes down immediately. So you have to self cannibalize, which as large incumbents are just structurally difficult to do. Very few companies have managed to do that ever well, and I don't think insurance companies are going to do that well to start off now. And that's what creates the opportunity for new product innovators to enter. But
Right.
obviously there's other stuff as well. There's distribution innovation, there's backend innovation, a lot of that. But product innovation is going to be a key part of the story, and that's why we've backed Ria. Obviously Acco is doing well,
Sure.
Digit, etc. So that's what the macro story is exciting from a product innovation point of view.
Interesting. Sure. I have a problem, right? This is I'm touching upon distribution, and when I come to distribution a little, in possibly a follow-up question as well, right? And typically what happens is when you start looking at insurance as a space, right? There's a certain credibility that the larger brands have established, right? Without of course naming any of them. And there is a certain trust that people have, right? It's essentially a cross-sell opportunity. It's just about the mammoth waking up to that possibility, right? Do you think a lot of the newer entrants, possibly some of them that you're backing, there are some of them, which you've sort of immersed in the process, right? Do you think they will have a difficult time when the larger players start looking at these smaller opportunities, when they go out and possibly create those micro teams which are actually working to crack this particular problem, right? Do you think that the advantage that they have and then the heads up possibly that they have, right, is not going to be as relevant and significant, right? When this say shift that happens, right? Or I mean, do you think that arbitrage is going to reduce between that mindset which exists today and the mindset required for building a quick, relevant plugin?
I don't think so, Ashu. I mean, I think yes, insurance is a trust game, and it is. You do need to build trust, and obviously, trust is built on the point of the claims, right? The claims experience, the willingness, ability, the quickness of settling claims, and all of those things. And getting that right is important, and is not straightforward necessarily. And yes, there's a regulatory issue there as well, to make sure that everybody trusts that if the regulators give you a license, you're going to stay in business. But I think if I look at it across markets, right, a lot of new entrants have managed to build that trust.
Right.
So I don't think trust as a winning factor for incumbents is that important in my mind. We'll see how that plays out, but I don't think it creates an unsurmountable sort of moat for incumbents, for challengers. I think the opportunities in, I mean, take customer experience for instance, right? The industry NPS is, I think, 2 or 3 or something like that. I don't know what it is in India, but globally, it's pathetic. Most people hate their carriers and are absolutely happy to switch to somebody else.
Right.
We are investors in a global insurtech called Cover Genius, where the NPS is 68.
Right.
So the opportunity for hungry challengers to truly reimagine the customer experience,
Right.
reimagine claims, increase the speed of claims payout, and change the way a product is put together. Insurance product is a very technical thing. There is a underwriting element, there's a marketing element, there's a distributing element, etc., etc. So how do you use data, etc., to actually price it most competitively, and uh, truly to the risk that is being underwritten, not sort of lot of random things stuffed into that to make the product more profitable from the insurer's perspective.
Mhm.
So in my mind at the moment, all the new skills needed from data, from distribution, from customer experience, from claim settlement, these are all new skills needed from the old way of doing business,
Right.
and they actually favor the insurgents a lot more than they favor the incumbents.
Very interesting. Shwetank, you highlighted on and three, basically you've broken them down in three critical parts, right? And I'm going to talk about the first one, which is underwriting, right? Now, I mean, I understand where you're coming from. That not a lot of these guys have that transactional data available, right? I mean, what they have is very surface level data available. Of course, that's dissected into say various parameters around demographic aspects and so forth, right? Uh, but the fact of the matter is that that's the case with I think any other insurance company, right? It's only going to be available from a certain point, right? Now, when you say underwriting is going to change and shift, right? What exactly does that entail, right? Are you saying and are we going to see newer models which are going to take behavioral aspects, for example? They're going to factor them into the modeling, right? For example, how you eat, what you do, how you for example, exercise, right? So are you saying that this is going to be a more holistic way of comprehending a subject, which you're going to ensure, right, basis those very micro habits and activities that he or she undertakes, right? Is that how the underwriting model is going to evolve? Is that what you said? Is
Yeah, it is basically. I mean, also, if you think about it, a lot more partner data. So at the moment, right, a lot of insurers just use their own data sets. They do not factor in data
sure.
from the partner that is distributing the product. So the embedded insurance plays obviously about using a lot more of your partner data to underwrite your product, and that can give you much richer data, right? If you're buying on Make My Trip, you know that the trip is to Goa. That's probably a leisure trip. That means you're carrying some expensive whatever, right? So if you think about it, you can actually make personalized products very quickly when you have partner data, and that's something again incumbent insurers just don't use. Uh, Plus, if you think about it, the mobile phone now captures so much data about yourself, right? So again, historically, right, life insurance journeys, etc., have had a sort of set of questions, 30 questions.
Correct.
What is your HbA1c? Did your father have cardiovascular disease? These
Right.
questions don't need to be asked anymore. You can get a lot of the data as long as, say, you allow access to Google Fit.
Right.
You can get a bunch of data that you can use to proxy for a lot of these questions. So again, And a lot of companies are doing this, right? So that changes the onboarding journey, it changes the customer experience, right? So
Right.
I'm not answering 45 questions, I'm answering 5. And from the endpoint underwriter's point of view, they've got managed to get as much clarity as they would from all sorts of wrong answers I provide on 40 questions in any case, because I have no idea what my cholesterol level was. Was it 220?
Right.
Was it 180? I'll choose the answer which I think is the most relevant. I mean, it's well known that most, there's a question on life insurance forms: do you smoke? And
Right.
that's typically answered no. So if you look at that, there's hardly any smokers in the world, right? Then
Right.
you look at British American Tobacco's annual product annual report, and they're like 30 million people buying cigarettes. So how is that working? So the ability to sort of weed out all of this is a function of data,
Right.
and large insurers have not had it needed to do it because this system has worked well enough for them.
Right.
Now it won't work well enough, and yes, you may not buy a long 70-year long policy with a new insurer, but
Right.
you may buy a 1 year 2 year policy because the trust factor is not that high, right? It's just a
Right.
1 year. Is you'll test it out, see how it goes. If you enjoy the experience, you'll buy another year, and then
Right.
your brand recall builds.
Interesting. So that another piece that I want to actually take up with you is the pricing bit, right? And if you look at traditional insurance, right? Uh, I mean, if you look at, for example, like Insurance Corporation of India, right? I mean, they've had a certain model, right, which was essentially an IFA model, right, where you have a very large distributed workforce who really go out, evangelize, right, and they're essentially people who crack a micro circuit, right, of people. And I think that's a model that they chose to build. And this was also a good model because it incentivized people, and they were essentially capitalizing that personal relationship that was there. Right? But when you start looking at the other insurance space, right, be it in the general insurance space, be it in the life insurance space, right, now pricing became exorbitant, right, and that was largely because there was a huge loading which was happening because of the distribution partners, right. Now, what we've seen in a venture funded scenario is essentially where we try and eliminate as many layers as possible, right? I mean, the idea is to get direct to the customer, right? What do you think, and how do you see the pricing pitch to play out? Do you think we're essentially going to be hovering around the same numbers when it comes to, say, standard policies, or do you think it's going to shrink significantly, given that this middle layer is going to go away? People are largely going to be transacting online, and they're going to be filling in this data. Of course, mobile data comes into the play. Embedded insurance is something that you're talking about, right? A lot of that happens, right? I mean, how do you see the pricing to behave as we go along?
Yeah, it's a great question, Ashu. And if you look at developed markets like UK, US, etc., especially for GI products, what you find is pricing reduces a little bit, but not dramatically, because there are still costs that are sort of uh, that need to be incurred, right? Distribution costs just need to be incurred, whether you're paying a aggregator or you're paying an agent. But the what's happened initially, at least, was that dispersion of prices came down. So earlier, your prices would be this far apart. Now they're this far apart, and bad experiences help move books to winners very quickly. So people who were, insurers who had a policy of basically making it harder to make claims or delay claim payout, etc., those got called out very quickly, and the customer experience as a whole improved for the customer, because uh, you know transparency came in, and people started moving to insurers who were more responsive, and
Right.
that pushed all the other insurers to be more responsive. That was version 1.
Mm-hmm.
Now version 2, basically pricing is changing based on your personal data, right? So this was still aggregated,
Right.
that in Ashu's postcode X number of accidents happen, so his price is this. Now pricing is coming to, hey, Ashu as a driver, right? With telematics, usage-based insurance, etc.
Right.
This is now different, and prices now are hard to compare because your price will be very different from my price,
Absolutely.
and it might be much lower for you than it is for me because you're a better driver, this, that, and the other. And that is now a function of direct and very interesting models coming out like Ticker, etc. But I think in India we're still far from that. In India we're still about the first round of transparency. But over time, yes, it'll become more personalized, which means insurance more personalized means it's a double-edged sword, right? For somebody who's healthy, fit, great driver, blah blah blah,
Right.
your price could come down dramatically, right? And it could, because you hardly have any risk. While for somebody like me who's overweight, this, that, and the other, at the moment I'm better off because I'm subsidized by great people like you,
Right.
and then over time that subsidy will walk away.
Right.
And that's going to be tricky. That's going to be a really tricky part of InsurTech, but that's what it is. InsurTech at the end allows you to price risk at the unit level rather than at the aggregate level,
Right.
and that changes the basis of insurance.
Interesting. Uh, you know, I have a bunch of questions around, I think, subsets within insurance, right? Which are gonna, and how do you look at that, right? But before that, I want to actually move to a COVID question, Shwetank, right? I mean, this is a very, this is a calamity of a very different kind, right? This is a problem nobody anticipated. We experienced it, right? It's changed us as people. It's changes our behavior towards, say, ourselves and I think environment and society at large, right? We've become a little more responsible, right? We've become at least a little more, aware. Um, but what has also happened is it's also opened up the crevices that existed in the healthcare ecosystem, right? And what that has also done is that there is now a set of people, a large set of people who are essentially dependent on the government to sort of help them, with basic health infrastructure, support, subsidies, so on and so forth, right? What do you think happens to the entire insurance landscape in an environment like that, and specifically more so in a developing region like India, right? Because a large part of our population still is in very rural setting, right? Are still very earn very less, right, to go out and actually cover for modern day healthcare expenditure. Like, what are your thoughts about that? I mean, how are you seeing that entire seriousness around the responsibility of the government now when it comes to delivery of healthcare and at that price?
Yeah, great question. I mean, ultimately, of course, that's what Ayushman Bharat is trying to solve. And the idea of the government, whether it's a provider or payer, has been debated for a long time, and I think the government has now decided to become a payer.
Right.
So the look, it's I think it's important for that level of government support, right? So certain amount of premium or a certain sort of base level of insurance policy for vast majority of the country being paid for
Right.
by one payer, which is the government through taxes, I think is a great thing. And actually, if done properly, can galvanize a lot of positive externalities, right? So you create the incentives to innovate on care delivery. You create incentives on innovating on the amount the care costs, etc., etc. So it can create a very virtuous cycle. I haven't followed it that closely at the moment in Ayushman Bharat. I know there was a lot of initial controversy around price for a lot of the procedures, and
Right.
some hospitals weren't willing to buy into that because the price was set too low. So I have not followed fully where that is reached, but fundamentally I think it's a great move to have a program like Ayushman Bharat, and that is the right approach, and hopefully the little kinks can be ironed out to create
Right.
a truly virtuous cycle which reinforces innovation care delivery, helps reduce overall costs, and prepares the system for managing health rather than just paying for acute illness bouts, right? So
Right.
so sets up payment structures that support that overall health, long duration health, rather than solving for just, hey, I need a bypass today.
Right. What happens to the insurance companies, the insurtech players, right, in a scenario like this where the government, wants to now step in, right? I mean, does this opens up a new set of opportunities? Also, possibly to my this thing, right, is essentially that becomes, this plays a huge role of being an evangelist, right? Because once they open you up to a certain variety of insurance, right, your sensitivity increases, right? And India is a fairly complex market. We operate at many layers, right?
Yeah.
What do you sense of this? I mean, and as an impact, right? So fundamentally, I understand where you're coming from. At a policy level, it's a great policy move. It's a great aspiration to have, right? I think we still to sort of see implementation across the region, right? But what do you think happens to the landscape, right? Of people who are in the in the business of providing insurance, right? I mean, how does this open up that as an option?
From an insurer perspective, obviously it's both. It's positive and negative, right? You have to figure out whether the premium covers your losses, and
Right.
whether you make enough investment income, etc. will never cover the losses otherwise. So
Right.
it's a classic group policy question. and the incumbent insurers are answering it with their with their responses to RFPs, etc.
Right.
For InsurTechs, this is a great opportunity because you have to learn how to work with the government, which is not
Right.
straightforward.
Right.
So that is a skill that not necessarily all InsurTechs will have. But if you learn how to manage the government process, right, the tendering process, responding to a tender, managing the payables, etc., etc., you open up effectively a large and sticky line of business. So
Right.
it is attractive, but it's
Mhm.
not something that I would recommend early stage startups trying to solve for.
Right.
So because it requires a different set of skills and takes more time than classic commercial transactions. So if you're an insurtech, build your business initially on purely commercial terms, and then if once you're at a certain size, say whatever $3 to $5 million of revenue, then you can start looking at how do you attack the government side of the business and add that on. But I wouldn't start there.
Interesting. Shwetank, I think we're very sort of generically using the word, right? Insure tech and insurance and all that, right? And general insurance, for example, is there are like you mentioned, right? There's a ₹1 insurance which is available for say, a 30-minute journey, right? And many such products and innovations are coming, right? But how do you which are the subsets that you see are going to perform the most? Are going to be absorbed, right? So which are particularly those pieces that you're personally excited about?
So just to make sure I understand the question correctly. So which type of insurance products am I most excited about?
Yes.
Yeah, it's a great question, and sort of you know maybe we sort of walk down it, right? So all these micro products I'm super excited about, right? I think the ₹1 insurance, ₹1 dengue cover.
Sure.
I think these are great ways to introduce you to insurance, right? So it's a
Right.
great intro to insurance, and hopefully you don't ever need it, but if it does, it actually provides some relief. The other play that I'm interested and excited about is parametric insurance, right? So that is insurance where you don't need to make a claim at all because
Right.
the claim is driven by external events which are observable by third party.
Right.
I think the claim process in every insurance company is broken and it's
Mhm.
just hard to claim, right?
Right.
So parametric claims, I think parametric insurance products are a great way again for a country like us to truly provide risk cover
Right.
without requiring a lot of action from the part of the cover holder.
Mhm.
Those two sort of come top of mind. Then there is obviously a lot of personalized products around both health and life.
Right.
At the moment, they are very generic, sort of your cover is the same as my cover.
Right.
I think there's an opportunity to, especially for life insurers, to truly, for instance, at the moment, life insurers mostly if you have diabetes, you don't qualify for cover.
Right.
Now, diabetes is a well understood chronic disease, which if you manage it well, your risk is no different from mine.
Right.
And if you don't manage it well, it's obviously much worse. But it's easy to not tell the difference between the
Right.
two. So the ability to sort of bring a lot of people who have been excluded because of the old rigid rules into the covered fold, into the insured fold, is exciting. I think that's what create impact and make protection available to people who need it, who are willing to pay for it, but who are being shut out because of the way the industry has viewed data so far.
Interesting. Shwetank, I'm gonna touch a little upon the distribution model. I mean, we have some companies which have come out which have been funded, right? There are Series A level, still early days, right? At least in the India market. Now, what is happening is they're essentially companies that are solving for distribution, right? They're essentially becoming a little more efficient, when it comes to distribution, right? It's a land grab game right now because it's an underserved market, and that's essentially where we are, right? Uh, do you think the future of distribution essentially is going to be this, where a venture funded company comes and goes out, acquires a lot of people, or do you think we're going to operate in a partnership led model where you have players like say Toffee Insurance, you have Echo, which are essentially embedded, integrated with a third party, and which are doing event based activity, or do you think it's going to be a hybrid structure where we're gonna have a physical sort of a setup, right? And given the kind of country we are, right, touch and feel is very, very important. In fact, I have a separate question on that, and I'll touch base on the Bharat aspect of where sort of India operates, right? But what's your sense, right? I mean, what do you see is going to be the right distribution model for a country like India? We need a touch and feel, right? I mean, insurance has always had that, and the other thing is we're not, unlike the West, right, where there's little cultural or a legacy, or the way we do things gets passed on, right? India is a far more integrated play, right? Our parents still handhold us into a lot of things, right? Even till the time we get married and so on and so forth, right? So there are a lot of those issues, right? I mean, how do you view that piece, right? I mean, how do you view distribution evolving in a market like India?
That's a great question, Ashu, and I don't think there's one sort of right answer here. So
Sure.
I think the way we look at it is that all the different distribution models will exist,
Right.
but some will have more winner take all dynamics versus others.
Okay.
So if you think about it, the embedded insurance plays will have slightly more winner take all dynamics, because once you're the leader, you have more data. There's a
Sure.
sort of positive feedback loop there, and also once you're embedded in sort of the big players, right? Like Ola will not embed 10 insurance providers, right? It makes no sense.
Right.
So embedded plays will tend towards more sort of winner takes most,
Mhm.
and the other guys sort of follow along. So when I think of investments, I like to think about sort of three market structures: winner takes all, winner takes most, and fragmented.
Right.
Winner takes all is basically that one company has more than 80% of the revenue of the market.
Sure.
Winner takes most is sort of one company, the three companies which have over 90%, of which the biggest is 60% kind of thing.
Right.
And then fragmented is that, no one company is above 20%.
Sure.
So that market structure helps you think about how, the market will evolve.
Right.
So I think, so all the distribution models will exist. Something like embedded insurance will be probably winner take most,
Right.
while the agent model, because our agent models are so different from South India to West India to North India to East India, will be fragmented, right? So there'll be regional players, there'll be some national players like Policy Bazaar, etc.
Mhm.
But there's a lot more space in that, and they will sell different types of products,
Right.
right? And they will, and again, I don't think there'll be like just one. Your buying behavior will be different, right? So you may buy embedded insurance for
Right.
your mobile phone without ever talking to anybody else, right? But for your health and life insurer, you may still want to talk to an agent. So
Mhm.
they will sell, the value added insurance will move towards more of the human workforce, while that's where the battle will be. The embedded guys will try and bring as much more of the value based products onto their platform,
Right.
and the agent forces, of course, will want to try and cross sell you some of the cheaper products as well, but they'll focus more on the truly difficult decisions, one where there is a lot more riding on it than a 30-minute ride insurance or a cracked screen insurance.
Interesting. Interesting. Shwetank, I want to particularly talk about embedded insurance models, right? And I think that's something which is being backed, by many, many players, right? Now, essentially, embedded insurance plays out well in an environment where you have a large player, right, which has a lot of data that exists, right? And then this insurance company can essentially understand that data and build a product around it, right? What that essentially means is that, for example, if you talk about mobility, right, there are just about two players that are there. I mean, there is an Ola and there's an Uber, right? If you talk about food delivery, for example, there's a Zomato and then there's a Swiggy, right? It's kind of reduced to just about two, right? We're essentially in a duopoly sort of environment, right? But what I'm getting to is that, you know, any player which is working in embedded insurance, right, is essentially dependent on just he or she just has two options, right? What that essentially means is that your policy and your ability to price it is going to get commoditized very, very fast, right? I mean, it's a competitive. There are going to be many suppliers. They're going to be just about two buyers to enable this kind of an environment, right? Your The possibility of abnormal profits, right, which is essentially what is talked about in insurance, right, which is being talked about in traditional insurance, and life insurance has kind of come and rescued the government on many, many occasions. That's largely because of the residual cash in the book, right? What happens in an environment like that, right? I mean, how do you view that? I mean, I understand these are very early days, right? But the fact of the matter is that the duopolies have consumed a large part of the market, right? And they're building that depth very quickly in the other parts of the country, right? Do you think, I mean, that possibility of abnormal profit, that possibility of owning the customer, the possibility of having a direct relationship with the customer is going to be very limited in an environment like that? Because I think the first round of thesis is essentially built on riding a partner, right? And what are your thoughts about
Yeah, no, it's a good point, and it is a challenge given that the mark. So a lot of these platforms are already sort of one or two, right, and there's
it? Sure.
not many more. So there is obviously some ability to build around it by, not obvious platforms like, say, a porter for logistics and stuff like that, right? That allows you to do a bit more. But that's why I think, I mean, we haven't made a bet in embedded insurance in India for that reason, right? Because there is a concern around effectively your value capture. And I think it's something that's unproven yet as to how the 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 thought process, I guess, from the entrepreneurs that we've spoken to is ultimately you expand beyond these, right? You embed it in the restaurant, you embed it in the kirana shop. You can once you build the infra, it can actually embed in many front ends, right? Not just and hence you will have the ability to sort of win business from these elements as well, which will make up for the very limited profitability you have in the main digital front ends. Having said that, if you've seen, from historical experience and from my time at Met, these products can be very profitable for insurers because a lot of the premium comes up. They're not big payouts on the claim side because they're small products and they're not those many claims. So their ability to actually make substantial revenues and substantial profits is still quite high, even if, so typically in these kind of products, right, you typically, for every rupee of premium, sort of 40 to 45% goes to the front end, right? 15-20% goes to the infrastructure provider, and the rest goes to the insurer, and they all make money. So it is a it is one of those things where the claim ratio is not that high. So, and most people don't mind it because there's peace of mind. It's not a big amount of money, and the claim ratio still remains low enough that everybody makes money. So that's going to be the tricky part, whether those kind of products can exist enough scale and are bought in enough scale to make everyone happy.
Shwetank, I honestly didn't have this as a question of the list of questions that I had, right, for this interaction, right? But I think you've given a fantastic breakdown in terms of, how the costs are going to behave, right? And how the relationships are behaving and stuff like that, right? And I completely leave it to you in terms of how you answer this, right? But I would love to know how you break down, uh, a player at a unit economic level, right? I mean, so what, for example, one has to be doing, uh, where it becomes, say, relevant, right? How do you break it down? How do you see it, right? As an investor when you're looking at anybody operating in the insurance tech space?
Yeah, I mean, look, obviously different depends on what you're trying to build, right? So, say you're a distributor, right? So I think of distributors as marketplaces, right? So you're a marketplace effectively. Typically, that means you're a marketplace with a 20%, 15 to 20% take rate. Now, the question is, what is your gross margin on that take rate, right? So if you can show a pretty high gross margin, then that's a fundamentally attractive business. And I think with the technology, you can have pretty high gross margin on that business. So it's a fundamentally attractive business. The question now is how big, what's the flow on your marketplace going to be, right? What's the GWP on your marketplace going to look like, and whether you'll be able to protect your take rate. And I think that's where a lot of my discussions are. Like, I think to protect your take rate, you have to add more services, right? You have to offer claims, you have to offer customer feedback, handholding the customer, bunch more things. Otherwise, your take rate will be threatened, right? Either the Swiggies and the food, the Zomatos of the world will want more, or the insurer will want more. So, as the marketplace provider, that's what you have to figure out. What are the things you can add to your platform so that your take rate remains where it is without threatening your gross margin. Right? So not easy decisions, but that's the fun of it. If you're an insurer, if you're a newer insurer, then it's simple, right? It's your GWP. That's one of your main drivers of metric, main value drivers, right? Because if you price it appropriately, you will make money if you have enough GWP. And then it's a question of why will your GWP build up? How will you distribute it? And how much money will the distribution cost? As an insurer, that's what's your key. The key lever that changes dramatically is distribution cost, because you can end up paying banks billions of dollars to distribute your products because desperately need somebody to distribute them. If you're a SaaS provider to insurers, it really is what is the market deep enough, especially if you're only selling to India at the moment, because if the entire spend for that particular area is $100 million per year at the moment, doesn't matter what you do, you're not going to make make a meaningful, you have to then think globally, right?
Right.
So SaaS for insurers is the toughest because the India market is not yet deep enough.
Right.
And that's why you need to then look outside and look at sort of going global.
Interesting. So I'm going to move to talking about Bharat, right? I mean, this has become my favorite question across, I think, all the conversations that I've been doing, right? And that's largely because COVID, while of course it's done the kind of damage that it has, right? I think one thing which I think it kind of started to happen pre-COVID. I think COVID kind of accelerated it. Essentially availability of cheap data, Chinese-made handsets, and a lot of entertainment, right? And what entertainment has kind of done is brought in a very different kind of influence, right? What COVID did was it packed people within a certain setting, right? Which essentially meant that they were essentially, the influence is only subject to just about 3 or 4 screens, right? Which made their behavior very predictable. Um, Now, I think everybody wants a bite into an pie of Bharat, right? For the size we are. Okay. Uh, as soon as insurance comes into the game, right? It is a challenge because of whatever social taboos that have been built around it, right? People start to think in those areas that if you go out and consume an insurance product, you're most likely going to be contracting that problem, and many such things, right? What is your sense of it, right? I mean, how do you see Bharat as an opportunity, right? From a lens, right? And what are the key adoption matrices that you would look at, right, to assess how this company A or company B is going to go out and perform in that
Ashu, it's a great question, and I have to be honest, right? I think personally, I look at more sort of the global businesses and more metropolitan businesses. So I haven't looked at Bharat fully for insurance distribution at the moment. I think it's the next level of complication that I haven't spent that much time looking at so far. So I'm just going to answer it honestly. That don't have a great viewpoint on that because there is enough at the moment in metropolitan India. I
part.
think in insurance to build. And I think the only products we've seen are more like the crop insurance, etc., for rural India. I
Right.
think those are great, and I think those, if you make them parametric, etc., will be attractive.
Right.
But we haven't spent enough time looking at unit economics outside of the core metros of India yet to have a very constructive viewpoint on that.
Interesting. So I'm going to save that question for our next conversation, right? I think we have limited time. It was a pleasure to have you with us. I mean, how I want this conversation to go on. Thank you so much for taking the time out. I look forward to having another round of conversation on a very very interesting topic, right? I think this is one of the key areas. I think this is one of the foundational blocks that we I think require as an economy, and I think I think it's still being worked upon, right? And that makes it a lot more exciting. It's still not very, very predictable in terms of how it's going to play out. But thank you so much for taking the time out. It was a pleasure to have you with us.
Thanks, Arshu. Really great being here. Thanks for having me. And I really enjoyed the conversation.
Thank you.